Hey budding entrepreneurs, welcome back to our channel. This is the second part of our episode 3 on startup cost and funding. If you missed the previous episode, we will place a link somewhere in this video or in the description. Now, are you excited to know how much you actually need to start your business? Well, no time like the present. Let's get started. How much cash do you need to get started on your business? Understanding how much cash you need when starting a business is essential to ensure you don't run out of money before your business has even started. Your cash balance on your starting date is the money you raise as investments or loans minus the cash you spend on expenses and assets. Keeping track of your cash flow projections is crucial to make sure your cash balance doesn't drop below zero. Otherwise, you might have to start reducing expenses or seeking additional financing. Now, you might be thinking, how much cash do I actually need? While it is tempting to raise more than you need for contingencies, it is essential also to have a realistic estimate. Outside investors don't want to give you more money than you need, and having excess cash interferes with your estimates. Outside investors, such as venture capitalists or angel investors, typically invest in startups or small businesses with the expectation of earning a return on investment. They want to see that the business is using the investment wisely and has a clear plan for growth and profitability. If a business raises more money than it needs, it can create a couple of issues. First, it can lead to inefficiencies and waste. If a business has too much money, it may be tempted to overspend on things like unnecessary equipment or marketing campaigns that don't yield a good return on investment. This can cause the business to burn through cash quickly and not have enough to sustain it in the long run. Secondly, having excess cash can interfere with a company's estimates and projections. If a business has more money than it needs, it may overestimate its future revenue and growth potential, leading to unrealistic expectations and poor decision making. Therefore, outside investors prefer to invest the exact amount a business needs to reach its milestones and achieve its growth targets. This way, the business can make the most of the investment and maximize its chances of success. Now, if you need a starting point, look at your competitors and industry benchmarks for specific expense categories. You don't want to directly copy the expenses you find, but confirm if your estimates make sense based on current market factors. You may find that you have a competitive cost advantage based on a healthy vendor relationship or a common expense you're able to avoid based on your own business model. There is no exact cash that you need to have before you can start your business. The amount varies depending on several factors such as the industry you're entering, the size of your business, your location, your business model. A good way for you to measure how much cash you need is by calculating the deficit spending you'll be likely to incur during the early months of the business and estimate how much cash you will need moving forward until you hit a steady break-even point several months and even years after opening. Next, let's talk about how you are going to fund your business. Internal source of funding. You can always dip into your personal savings to get your business off the ground. Just make sure that you have enough left over to pay for rent, groceries, and all the boring stuff. Or you can reinvest some of the sales revenue you're making. Now, this is actually called bootstrapping. This means starting your business with little or no money and investing the profits back into the business as it grows. Many businesses bootstrap in their early stages to help minimize risk and debt. Keep in mind that this might slow you down on your growth a little bit, but at least you won't be swimming in debt. There are plenty of low investment ideas like dropshipping or print on demand that are great candidates for this method. This can be a great strategy for keeping costs low and building a solid foundation for your business. If you have friends and family members who believe in you, let's be real, who doesn't? They might be willing to throw some financial support your way. Just don't forget to pay them back. Otherwise, your Thanksgiving or reunion dinners might get a little awkward. External source of funding. Small businesses can get loans and personal loans, which are great options. But here's the catch. You'll have to pay interest on these loans. Make sure you plan ahead and factor in these payments as a necessary expense. Trust us, defaulting on these loans could lead to some serious trouble. And you don't want that stress hanging over your head as a new entrepreneur. Want to get your product in front of a huge audience and raise money at the same time? Crowdfunding platforms like Kickstarter and Indiegogo allow you to do just that. By creating a compelling campaign and offering enticing rewards, you can attract bankers who are willing to contribute small amounts of money to help bring your vision to life. Angel investors. These are not just wealthy individuals who can provide you with the capital you need to get started, but they can also offer valuable advice and connections to help your business grow. Plus, it's always exciting to have someone believe in your business and want to invest in your success. Venture capital. If you have a high-growth startup with big potential, venture capitalists may be the perfect funding option for you. These investors specialize in finding and funding the next big thing, and they can provide a significant infusion of cash to help you take your business to the next level. Grants. Did you know that there are organizations out there that will give you money for free? It's true. Depending on the nature of your business, you may be eligible for grants from government agencies, non-profit organizations, or private foundations. Just be prepared to put in the work to apply for these opportunities. Remember, there's no right or wrong way to fund your business. It's all about what works best for you and your unique situation. So, choose wisely and happy financing. Tips on how to manage the startup cost for your business. Have a just-in-case fund. You never know when you will need to cover an unexpected expense. So make sure you have some extra cash on hand. Maybe open a business line of credit so you are always ready for anything. The amount and duration of the just-in-case fund will depend on the specific needs of your business and the level of risk you are comfortable with. As a general rule of thumb, it is recommended to have at least 3 to 6 months worth of expenses set aside in case of unexpected emergencies or downturns in revenue. However, if you have a high-risk business, you may want to consider saving more. It is important to regularly review your cash flow and adjust your emergency fund accordingly to ensure you have enough reserves to weather any unforeseen circumstances. Keep your financial projections up to date. If you learn of a new expense or change in your business, make sure you update your financial projections accordingly. It's like giving your business a regular checkup to make sure everything is healthy and profitable. Updating your financial projections helps you stay informed and prepared for any changes in your business's financial outlook. If you don't update your financial projections, you could end up making decisions based on an outdated bit of information, which could lead to financial problems or missed opportunities. For example, if you don't take into account a new expense, you might overspend and find yourself short on cash. On the other hand, if you don't account for a new revenue stream, you might miss out on a valuable opportunity to grow your business. By keeping your financial projections up to date, you can make informed decisions that are based on the most accurate and current financial information available. Start small and grow. It's like planting a seed and watching it sprout. Start with limited selections of goods and products and a small market. This way, you can test your financial projections and see how your business is doing before you invest in more infrastructure and expansion. Barter for services. Reach out to other small businesses and services for things like marketing or graphic design help. You might be able to trade skills and get things done without spending a dime. You don't have to be a perfect entrepreneur or an experienced financial forecaster to avoid the pitfalls of underestimating your online startup business expenses. As long as you are motivated to keep your expenses low and in control, and you're willing to adapt to new changes, you have chances of making your enterprise profitable. So there you have it. With these tips in mind, you'll be well on your way to creating a successful business plan and calculating your startup costs. Thanks for tuning in and stay tuned for future episodes.